Hello and welcome to the Defiant for our 2022 year in review. Today we're looking back at the biggest developments, the highs, the lows, and the biggest surprises in DeFi over the past 12 months. Don't forget to subscribe to the Defiant for objective coverage on everything DeFi related, including our 2023 outlook coming soon. Thanks to Railgun for sponsoring this video. More on them later. 2022 has undoubtedly been one of the most volatile years in DeFi, both in terms of price fluctuations and surprising turns of events which unmasked some DeFi heroes exposing their true, allegedly villainous colors. But that's not to say it's only been doom and gloom, or that we'll forever remember 2022 as the worst year in crypto history. Well, okay, maybe those of us who lost money in the Terra, Three Arrows, and FTX debacles will, but there might also be a silver lining. Some important lessons learned and a few hard-earned battle stripes. A wise man once said, "Perspective is everything." Granted, this might not sound appealing when your portfolio is down 70%, but perspective is still very important when looking back and reflecting. So before we get to our favorite DeFi moments of the year, the innovation, the launches, the hacks, exploits, bankruptcies, and our wall of shame, let's start with a bird's eye view of 2022. Digital assets, like most asset classes, experienced a significant drawdown this year. The total crypto market cap dropped from 2.2 trillion in January to less than 1 trillion by August, where it has stayed since. Analysts indicate that the economic downturn isn't unique to digital assets, pointing to lingering pandemic effects, supply chain disruptions, high inflation, efforts to combat that inflation, and the Russian invasion of Ukraine as macro catalysts, causing even the S&P 500 to trade around 20% below where it opened this year. Bitcoin is down 64%, Ether is down 68%. Most altcoins have been decimated further, but the wall of shame is populated by Luna down 100% and FTT down 97%. We'll be coming back to those just in a second. But again, perspective is key, so don't let these figures dishearten you, as statistics and numbers don't always tell the whole story. For example, Coinbase now has a lower market cap than Dogecoin despite being considered one of the most important centralized crypto entities. But that's not necessarily due to the fundamentals of either project. Rather, as Lunar Crush reminds us, the community of supporters and investors, influenced by the active number of social contributors, is also important. Zooming out to see the bigger picture can be a helpful exercise, lest we miss the forest for the trees. And despite these outflows and devaluations, and despite bureaucrats at the European Central Bank claiming that Bitcoin is experiencing a, quote, artificially induced last gasp before the road to irrelevance, around 900 million crypto users would likely disagree. After all, cryptocurrencies have found a bittersweet use case this year with over $100 million of crypto assets transferred to Ukraine for humanitarian aid and for helping people displaced by the war. In total, stablecoins settled over $7 trillion in value this year, marking a record high in the history of cross-border payments using digital assets. And if your friends or relatives are looking for further evidence that digital assets are here to stay, point them to a report from Accenture, which found that 1 in 5 consumers worldwide are quote-unquote crypto curious. So now that we've got a bird's eye view of the macro picture, let's dive a little deeper. We had some interesting developments in both Layer 1 and Layer 2 networks this year, so we're going to start with our favorites. But first, a quick word from Railgun. DeFi with private, anonymous DEX trading is real and works today. The Railway wallet uses the Railgun encryption system to keep your trading strategies hidden from greedy eyes. Try the Railway wallet today, visit the website at railway.xyz. Be private. Railway is available for mobile and web on Ethereum, BSC, and Polygon. Back to the review. So for many, a real contender for the happiest, most euphoric moment of 2022 may have been Vitalik's iconic shark dance as he and his colleagues introduced Ethereum 2.0 following the merge. We made a series of fun, informative videos on the long-awaited Ethereum upgrade, so be sure to check them out. For anyone who needs a 5-second recap, the merge was an upgrade that eliminated the need for energy-intensive mining by transitioning to a proof-of-stake consensus mechanism in Ethereum. Now, before we shift the spotlight to Layer 2 blockchains, we'll give a quick shout-out to the alternative Layer 1 blockchains like Solana, Avalanche, and Terra that achieved, however temporarily, higher individual TVLs than all Layer 2s combined. Many will think of 2022 as the year that Ethereum's Layer 2s took off, and it was certainly a pivotal year for them, with many, including Vitalik himself, proclaiming them the future of Ethereum scaling. Ethereum's Layer 2s are here to stay. At the moment, so-called optimistic rollups, Arbitrum and Optimism, are the top names in the Layer 2 race, but folks are excited by the scaling benefits of zero-knowledge technology and some of those L2 protocols are expected to make their debut next year. Matter Labs, Polygon, and Binance are among the players working on zero-knowledge, Ethereum-compatible rollups. On to NFTs. 2022 saw both wider interest in non-fungible tokens and massive price depreciation compared to the previous year. To name just two examples, Reddit released collectible avatar NFTs, while Logan Paul's NFT dropped from over $600,000 to $10. Whatever way you choose to look at NFTs, some undeniably interesting trends emerged, and despite a 91% decrease in trading volume between April's high of $1.3 billion and today, the current weekly volume is 340% higher than it was in January 2021. NFT gaming took the world by storm this year, receiving around $83 billion in funding, according to the Block's research team. That's a record amount raised by a single category in a calendar year. The play-to-earn, or P2e Mania, began with the rise of Axie Infinity back in the third quarter of 2021. Virtual reality, the metaverse, and blockchain gaming were the favored sectors, and we'll be keeping an eye on the intersection of these technologies in 2023. Born out of a multi-year bull market, the digital asset industry was drunk on success to start the year, and even the so-called smart money fell victim to greed and poor risk management. Let's run through some of the most spectacular and concerning collapses of 2022. Crypto hedge fund Three Arrows Capital grew to be one of the top players in the industry, with investments in large projects like Avalanche, BlockFi, and Solana. At its peak, Three Arrows managed around $10 billion in crypto assets thanks to early investments in Ether and AVAX. Then it imploded, thanks allegedly to a mix of poor risk management, a pinch of recklessness, a dash of greed, and a whole heap of leverage. Three Arrows failed to pay loans back to many of its investors, including Voyager Digital, and got margin called. Three Arrows had borrowed hundreds of millions of dollars to make bets on certain tokens and DeFi protocols, and, well, it bet wrong. Three Arrows co-founder Su Zhu made his name as a crypto bull, championing the idea of a super cycle in which Bitcoin would hit $2.5 million per token and become a new form of gold. He believed the digital asset market would never again make a bearish turn thanks to blockchain innovation. After the Luna Terra collapse, he had to admit that his thesis was regrettably wrong. It later turned out there was another critical ingredient to Three Arrows' demise, the Luna Terra collapse that I just mentioned. In May, the algorithmic stablecoin Terra USD and its sister coin Luna caved, bringing down the $40 billion Terra blockchain ecosystem to which they belonged, and creating a $300 billion loss in the broader crypto industry. The impact of this collapse caused a massive loss of confidence and accelerated the onset of the crypto winter that we now find ourselves in. The domino effects from Luna's collapse were powerful. Bank run-like withdrawals by Celsius users followed, and that firm froze its user assets, eventually declaring Chapter 11 bankruptcy in July. The subsequent allegations that Celsius, a trusted industry giant, had engaged in market manipulation, failed to implement basic accounting controls, and failed to protect user funds was another low point this year. Voyager Digital also had to file for bankruptcy due to their exposure to Luna and UST through Three Arrows. But this time, there was a savior, FTX. Nobody saw this one coming, but it quickly became the most talked about story in the cryptosphere. Sam Bankman-Fried, FTX's CEO, was ready to put up his own money to save insolvent crypto firms and their unsuspecting customers. Some started calling him the JP Morgan of crypto. He was loved and endorsed by politicians, celebrities, retail investors, and even institutions like Sequoia Capital. The list goes on. Then it all came tumbling down. Unless you've been living under a rock, you know this story already, and we've already made a number of videos covering FTX's spectacular demise and the subsequent contagion, so be sure to check those out. SBF became a political megadonor, linked up with world-class sponsors like Stephen Curry and Tom Brady, and put the FTX logo on the Miami Heat arena. An alleged $7 billion fraud happened right under everyone's noses. So our top takeaway from this story is, be careful of halo effects, don't trust, verify. As FTX has collapsed, sent shockwaves rippling through the cryptosphere, the contagion spread to crypto lenders like Voyager and BlockFi and Genesis. We're still feeling the impact of the FTX saga, and even Binance hasn't gone unscathed. Check out our recent video covering whether or not Binance can weather this storm without further losses. Safety was a key theme this year as well, and in true crypto fashion, things got so bad at one point that October became known as Hacktober. At that point, $3 billion had been stolen in 2022, doubling the previous year's amount. As many as 4 crypto projects were hacked or exploited in a single day, leading some to speculate the hacks in question were, in fact, inside jobs that developers at those companies had left a loophole in the code to exploit later on. We covered this as well, so be sure to check out that video if you haven't already. Our takeaway here is that cross-chain bridges expose users to additional risk, so use them with caution. We certainly can't ignore the role of regulatory agencies in the tumultuous year we've all survived. So a quick shout out to Gary Gensler's SEC, who, despite a one-on-one Zoom call with SBF, failed to notice any red flags before the collapse of FTX. Maybe he was busy basking in the glory of having fined Kim Kardashian $250,000 for shilling ETH Max on Instagram. Either way, Republican Congressman Tom Emmer sees it differently, arguing Gensler should have been aware of the fraud and should be held accountable for having failed to catch it. Ultimately, the U.S. Attorney's Office for the Southern District of New York charged SBF with crimes ranging from wire fraud to money laundering and had him extradited from the Bahamas. Many who followed this story reveled in the conditions at Fox Hill Prison, where SBF had to wait until being flown back to the US. You can get all the details on our website or from the many videos we made covering the FTX saga. For the believers in the technology, who see the contagion as a result of human error, greed, and mismanagement, nothing hurts more than seeing DeFi get conflated with centralized entities whose collapse have both damaged trust in DeFi and cost people their hard-earned money. So the contagion, undoubtedly, is our low point of the year. So to close this chapter on a slightly more upbeat note, here's an interesting poem about SBF written by artificial intelligence. We've learned some lessons along the way. There is no smart money. Even venture capitalists, hedge funds, and quants with MIT degrees can and do fall victim to greed. Do your own research. Cults of personality. We can put people up on a pedestal all we want, but unless we know when to take custody of our own assets, we're overexposed to a potential crash. Nothing is too big to fail when human error is involved. Transparency. With the exception of the Terra Luna crash, the problem wasn't DeFi, it was opaque leverage used by CeFi. Following the FTX collapse, Binance processed $3.6 billion in withdrawals in a week, and although more volume was processed during the Luna and FTX crashes, investors are still calling for more transparency around the industry leader's finances. Self-custody. Not your keys, not your cheese. Remember that unless you hold your own keys, ideally in cold storage, you're not truly in charge of your funds. And finally, we're all survivors. Those of us lucky enough to have weathered the storm of 2022 have plenty to look forward to in 2023, so check out our Outlook video for the next year. As always, thank you for tuning into The Defiant.